Hello learners, welcome to C.A.S.H. In this video, we will learn how to pass journal entries for the transactions. In accounting, we treat business as separate person and owner as separate person. So with that concept, we have to pass journal entries. Business itself can't pass any transaction or it cannot prepare ledgers, balance sheet, etc. So on behalf of business, one person is appointed called as accountant. So that person will pass the journal entries and manage the books of accounts. Another important point is adjustments. These are the extra information relating to the transaction. Every adjustment will have always two effects, one in P&L and other in balance sheet, or both in balance sheet. Whenever you prepare balance sheet for the transactions, if you have adjustments in the questions, then in transaction point out which adjustments relate to which transactions, so that you will not forget the adjustments also, and you don't have to read adjustments again and again. For that, you must read all the transactions carefully. After that, you read adjustments and note down the numbers to the transactions which they relate. For example, rate of interest or a loan is 10% per annum. It is related to bank loan. Which transaction is talking about bank loan? So it is number 5. So I have written 1 and 3 because this says the above payments are made on month end, that is interest and rent. So I have noted 3. Shop rent 8,000 per month. It relates to transaction number 3. So I have noted down here. Again 3 because it should be made on month end. So let's begin to pass journal entries. The first transaction is that you started a mobile store business by investing 2 lakh cash on 1/4/2025. Always keep in mind, whenever you have to pass journal entries, there must be 4 informations always available. Those are on what date it happened, who is the receiver, who is the giver, and what is the amount. So now in this transaction, what is the date? That is 1/4/2025 it happened. Who is the receiver? Your business, mobile store business is the receiver. Who is the giver? You are the giver. And what is the amount? 2 lakh is the amount. So with this, we can pass journal entries. So the first journal entry will be on 1/4/2025, cash account debit to capital account. The amount is debit 2 lakh and credit 2 lakh. Now, remember the golden rules of accounting. The real account says debit what comes in, credit what goes out. The personal account rule says debit the receiver, credit the giver. Remember, real account and personal accounts are related to balance sheet. So now the first transaction says you are the giver and business receives. What it is receiving? It receiving cash. So cash is an asset. Cash comes in debit. So debit what comes in? Cash comes in, it debited. Credit the giver. You are the giver. Now capital account. You are giving money in the form of capital. So capital account credit. This is called the narration, which tells you what is happening with this transaction. So this one set is one transaction. So we have done first transaction. Now let's move on to second transaction. On 1/4/2025, you opened one current account and deposited 1,90,000 rupees. Again, question the 4 things. What is the date? Who is the receiver? Who is the giver? And what is the amount? So you will get all the answers. Once you get all the answers, you are ready to prepare journal entries. So you know debit, credit, amount, date. On 1/4/2025, since bank account and cash account both are real account, we will use the rule of real account only. Bank account debit, because to bank account money is coming in. From cash account money is going out. So debit what comes in, credit what goes out. So 1,90,000 comes into bank account, 1,90,000 goes out of cash account. Now the third one. Before begin with this transaction, check with the adjustments because we have marked the adjustments here. Check once whether these adjustments comes before the transaction or after the transaction. If it is after the transaction, you can pass this transaction. If it comes before the transaction, then you have to pass this transaction only after the adjustment. Here, adjustment number 2 says shop rent 8,000 per month. It is made on month end, but the transaction is happening on 1/4/2025. That means this transaction is happening first. So we will pass the transaction first. So the date is 1/4/2025. You made agreement with landlord and deposited 40,000 rupees, which will be advance for rent, which is the rental deposit normally taken by landlords. So the journal entry is shop rent advance account to bank account. Debit the receiver and credit what goes out. If you observe, we have debited shop rent advance account, not the landlord account. Why? Because we are giving advance to landlord, which means he has not earned this income yet. It will be his income only after we use the service. Until we use service, it is unearned income for him. So for that reason, we won't debit landlord account, but we debit shop rent advance account. So we move on to next one. Before we begin with the transaction 4, as I already told, look at the adjustment before transaction. If adjustment comes before the transaction, you have to wait for the transaction. So the fifth adjustment says cost of mobile per unit is 5,000 and the transaction is telling you purchased 50 units of goods, that is mobile, from Big Mobiles on 20th 4 2025 and paid 1 lakh rupees. So which one to record first here? Either the adjustment or the transaction. It is adjustment first because it is mentioning per unit the rupees, the cost is 5,000, but we have paid only 1 lakh to the creditor. So the balance will be due. The journal entry will be like this. We will pass the due entry first. Purchase account debit to mobile account. Debit all expenses and losses. Credit the giver. Here 50 units of mobile purchased. 5,000 per unit. Total 2,50,000. This is the amount for transaction happened. But this is the amount we paid for that transaction. That means 1,50,000 is due with us. So we call it as due entry. So now we have finished the adjustment and we can now pass the transaction. On that day only you paid 1 lakh to that creditor. Debit the receiver because creditor is receiving the money. Credit what goes out. Money is going out of your bank account. Now the fifth transaction. It says you borrow rupees 1,20,000 from bank and pay principal of rupees 10,000 per month. The date mentioned is 1/5/2025, which means on this date you took loan. Let's see the adjustment, whether the adjustment comes first or the transaction. It says rate of interest for loan is 10% per annum, but the payment are made on month end. You pay interest after taking loan, not before the loan. So this transaction is happening first. But before going to this date, we have to make sure we have covered this month transaction in full. The last transaction ended on 20th 4 2025, but adjustment number 3 says the above payments are made on month end. We have to pass one journal entry on 30th April 2025. Rent is in expenses, so debit all expenses and losses. Money is going out, credit what goes out. So the next adjustment is you took bank loan rupees 1,20,000. Bank is giver, you are receiving, money comes in, so debit what comes in and credit the giver. So we will move on to next transaction. So this is the date of transaction. Debit what comes in, computer and printer both are asset. Credit what goes out, money goes out of bank, so credited. So the next transaction. On 20th May 2025, you sold 5 units for 32,500. So the transaction happened on this date. You receiving money of rupees 32,500. Debit what comes in, money comes to bank, credit all incomes and gains. So this is your income. So the next transaction, you sold 10 units to Slim Mobiles LLP on 1/6/2025. But now we have two journal entries. One is for interest and another is for shop rent. On 31st May 2025, since you borrowed loan, you have to pay interest. We don't directly pay interest, but for that we have to charge interest. That is called due entry for interest. So the interest amount is calculated like this. You took loan of rupees 1,20,000 at the rate of 10% interest. 1 month has passed till now, so rupees 1,000 rupees is the interest. Since interest is an expense, debit all expenses and losses. Bank is the person who is giving loan, so credit the giver. Now on month end, we have to pay both principal and interest. That is called installment. Since we are paying installment amount, money is going out, debit the receiver, credit what goes out. Now another transaction on month end is you have to pay rent. So debit all expenses and losses. Money is going out, credit what goes out. We can move on to transaction number 8. You sold 10 units to Slim Mobile LLP on 1/6/2025 for 65,000. 40,000 received and balance yet to receive. This means you now have the receivable of 25,000. So on this date, you sold goods to Slim Mobile LLP. So debit the receiver, credit all incomes and gains. Money comes in, debit what comes in, credit the giver. Ninth transaction says you paid 1 lakh to Big Mobiles on 15th June 2025. Big Mobiles is receiving the money, debit the receiver, credit what goes out. If you think everything is done and move on to the ledger, then you are wrong. We still have to pass journal entries till this date. On this date, we have to pass two more journal entries, that is interest and shop rent. Interest will be calculated on the outstanding balance of the loan account, not on the original balance of loan amount. We took 1,20,000 and have paid 11,000 as installment. Now the outstanding balance is 1,09,000. So the interest rate will be 1,09,000 into 10% for 1 month. So 908 rupees. Since interest is our expense, debit all expenses and losses. Since bank is charging interest, credit the giver. On the same date, you are paying installment, that is interest plus principal. Principal amount is 10,000 and the interest amount is 908. So you will pay 10,908. Since you are paying, bank will be receiving. Debit the receiver, credit what goes out. And on the month end, you will pay shop rent of rupees 8,000, that is rent expenses. Debit all expenses and losses, credit what goes out. So this is all about the journal entries. Finally, the total debit and total credit of the journal entries should always match. If this video helped you, make sure to like, share and subscribe to support the channel. In the next video, we will learn how to prepare ledger accounts step by step.